Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today's video, I'm going to be taking a look at the stock market as well as other stock charts and indicators, and we'll even talk about the Magnificent Seven stocks and Palantir as well. So getting into fear and greed, we can see that the stock market is up in greed territory, even with the recent minor pullback we've been having. And that's contrast to a month or so ago when we were in fear and extreme fear when the stock market fell almost 25% from its highs. And a chart that we've been watching is this one where we have the presidential election pump and the inauguration dump. And that's because since 1932, every new administration that comes in, they're going to try different economic policies and experiments. And that's going to get priced in a little bit. And whether those tend to be good or bad in the near or long term remains to be seen. But if we are in a non recessionary environment, then we should see new all time highs. If we were to see a recessionary environment, then I'd be expecting those lows from a month or so ago to be broken. So, right now, I think we're probably at a point kind of like this right here. Maybe we get a minor pullback, but if it's just a higher low, that would overall show us a trend, probably to the upside. Something else to keep in mind is that the second year of a presidential cycle is typically the most bearish one, or the one with the worst returns. So, first year, a lot of it's going to make the news, and there's all this sensationalism and embellishing, and depending on where you fall on the political spectrum, you might feel great or not so great about the economy. But if you just step back, there is other things going on. We want to just take a look at the data and remove our bias. Here at Market Psychology 101, our bias gets in the way. That's why I always start off with fear and greed, because we want to be cautious when there's greed and look for opportunities when there's fear, instead of missing out on the recent dip like many people already have. Something else to consider is that, and this is probably my favorite chart, I'm going to keep showing this every week, is that when we get those pullbacks, that last pullback was between 20-25%. For any of you subscribers, you heard me say this is a twice in a decade opportunity. Yes, we can get further discounts. And if it's a once in a decade opportunity or more, I am not missing those levels no matter how bad the news is. Now, that's my plan. I'm not telling you what to do. People saying we're going to get another Great Depression, whatever, we'll see. But there are certain levels, in my opinion, you just can't miss. Now, whether they're the bottom or not, in my videos, I talk about different indicators to show whether we have confirmation to the upside or not. But I do think when we get into some of these levels, there just can't miss levels for certain stocks when we're getting there, or crypto, if you will. So this chart, probably take a screenshot, save it, and just remember that if we are to get a recession next year, 2027, whenever, if the S&P is down 40% from its highs, then maybe you want to consider dollar cost averaging in or buying that dip. All right, one of the other, or a couple other charts I want to show you. This is just from the last 30 years, the S&P 500 PE ratio, as well as the Shiller PE ratio. And in recent history, when we zoom way out, this is why I don't have it way out, because there's a lot of things in the market that's changed, and in how money is used, how it's implemented. So I think more of the last 30 years is more of a representation of what we see today. But what we're looking for here is, our stocks cheap or expensive? And on the overall PE ratio right here, it shows it's more towards the expensive territory, or is, when it's in this pink area. The average, you can see the mean is down there somewhere around 15 or so. But on the Shiller PE ratio, it is saying stocks are definitely expensive. You've probably heard Warren Buffett saying that he's all in cash now, or he's been selling more and more stocks than ever before, going all in cash. And this is probably why some people do refer to this as the Buffett indicator. I've also been talking about how in 1998, before we had the true euphoric bubble, we did get into this area, and I'll show you 1998 comparisons on a couple other charts as well. But we did get into this area, had a pullback, and then went into bubble territory. Dot-com bubble, AI bubble, I think there's some similarities there to be had. I believe it is still possible that we go higher. Crypto fear and greed, crypto also high up in greed. And since the bottom in February, higher lows, higher highs, that's a good thing. And also been talking about a lot how when we've had negative February, March, April, May, in the past have tended to be good. Now, the summer time for crypto tends to be one of the worst times for crypto unless you are in a year within the cycle top. The summers tend to be good. So summer of 2020, summer of 2017, when we were within a year of the top, that was a good time to buy. Now, most people subscribed on my channel, probably for the crypto content. I talk about Bitcoin mining stocks. I talk about altcoin analysis and other macro crypto charts and indicators. So subscribe if you want to hear more about that. All right, so for the stock market, as I was talking about, from that high, you can see the stock market came down at around 21%. Again, keep that in mind when we are getting these big pullbacks. They don't happen often. You're probably already feeling bad that you missed it. Not saying there isn't worse to come, but I do think there's going to be more risk, more volatility to the upside. The VIX has already been showing us that. So I do believe, by the time we do get a recession, it's possible we get to these levels again, even if that's in a year or two. But what Bitcoin's doing right now from its most recent high to low, we have on our Fib retracement, you can see Bitcoin almost got to the 888, but then it stalled down. Here we had about 10 days up. When you start to see about 10 green days in a row, it's normal to expect pullbacks, but you want to see this 786 hold as support. If it gets under that 786, we have all these daily moving averages above that macro golden pocket. The 20, this one here is 100, the 50 and the 200, all these moving averages between 57.50 and 56.50. So any of those levels would be the ones to watch for. And then zooming way out, way out, the S&P 500 overall, it's been in this channel ever since the great financial crisis. So macro wise, if I'm looking for possible topping areas, I mean, macro wise, we could see the upper end of this channel is at around 7K. If we take this most recent fib, here we go. Oh, I have to go to, why is that not working? Let's try that again. Oh, here we go. It's on the wrong thing. If we take our most recent fib and go off of log scale, that would even show us a fib target at around the 1618 at around 6,900. So if the S&P, I'm not saying it will get there, but if it gets anywhere near 7K, in my opinion, that's probably going to be a topping area. Going back over to 1998. I don't know why I said 2020, 1998. As I was talking about that bubble before, that AI bubble, the dot-com bubble, some comparisons maybe you could draw. We saw the S&P bounce off that 50-week moving average. This red line, by the way, that's when the Fed was doing rate cuts, and then we went higher. So going back over to today, kind of similar. The S&P 500, candle body-wise, bounced off that 100-week moving average. So some similarities. It did wick a bit lower, went down to this trend line that has marked these bottoms since 2018. COVID got below that in 2020, 2022, the low in 23. And it's possible that was another most recent low. So I do like that we're seeing the S&P 500 on the weekly get above this 786. I think we should also take a look at the MACD. This is just flipping positive, which it's also done for Bitcoin as well. And in the past, when the MACD's flipped positive on the weekly, it's been a good overall sign of more upside. So yeah, that's hopefully a green MACD is showing us that we have further up to go. All right, let's get over to the VIX. So the volatility index's volatility has been going down. That's been good for markets. However, last August and then most recently in April, we've had a couple major VIX spikes. And generally speaking, when the VIX is above 30, those can be good dip buying opportunities. But we are seeing this break of this downtrend in the VIX. It's definitely going up. Now, right now, the weekly, it's holding supports. I think the daily has lost supports. Yeah, you can see It's testing as the S&P's having this little correction in the downside. Maybe it'll get a rejection sometime soon on the daily. But do keep this in mind that back in the 1998 2000 era, we'll go right here. Remember, this was the dot-com bubble. Now, a bottom did come later, recession did come later. But if you just take a look at 98, right here, look at all that volatility. People thought the bubble was popping. Now, the VIX still stayed elevated in the 20 to 30 range. You go to today, if something like that's happening, 20 to 30 range is even higher. And that was as we were going into a bubble. So just keep that in mind, is that bubble's euphoria. We've just had 2 great years in the stock market. So volatility coming back is to be expected. As far as one of our leading indicators we watch on the weekly when this turns green, percent of stocks above their 200-day average, MMTH, is the ticker if you need. And so when we get these dips or these peaks down here, kind of with the VIX, those can also signal good dip buying opportunities when we start seeing it go back up. And that's what the VIX spike in this showed us. So make sure you watch these charts. Good leading indicators. We'll see what happens at the resistance. It's not too far away. Maybe we're going to run into some chop here for a second. Also, there's been a lot of conversations about the Fed moving from quantitative tightening to quantitative easing. This is the U.S. Central Bank balance sheet. USC BBS is the ticker. And when the Fed last moved to quantitative easing, it was off that 100-month moving average. Right now, it's very close to that 100-month moving average. It looks like the Fed is trying to soft land this thing before maybe bringing back some quantitative easing, but we will see about that. All right, let's go to the weekly on this one. This is yield curve inversion, and what we don't want to see is this spiking too quick. In the past, when yields have spiked, then the stock market, being in stock, speculative, tech, crypto, isn't as attractive. So when the yield curve uninverted in 2001, about 600 days after is when we saw the market bottom. That's where I put the red line. It's where the S&P bottom was. So 550 days. And then from the great financial crisis, from the yield curve inversion, when the Fed was no longer raising rates, but rather cutting, that was about 600 days from the uninversion to the bottom. But look at the steepness of these yield curve going up. Now, the yield was inverted for a while, so I do wonder if the bottom is further away. But as I showed you in that presidential cycle chart, where the second year tends to be the worst, maybe the third year not so much. I do wonder about that maybe 25 is not going to be as bad as some people were saying. When Trump first became president and was doing all this tariff stuff, all of a sudden the tariffs are making deals and it's all going away, and boom, everything's fine again. We'll see in the long run. But in the short run, I'd say if yields aren't spiking, then we still have room to run. But do pay attention to yields. Unemployment still at 4.2. If it stays at 4.2 or down here, that's good. It's kind of one of the big differences from 1998. 1998, unemployment is still going down. Here, there's definitely an uptrend, but if it stays sideways, that would be good as well. If we take a look at inflation as well, United States inflation rate, that's still going down towards the Fed's magical thermostat target of 2%. So if they spin the dial just right and get a 2% inflation, they believe that's a good thing for us. For Bitcoin, we've been talking about this for a bit, that once the Bitcoin has a green MACD, the moving average convergence divergence on the weekly, which it did, I've been talking about this a while, that when this happens, Bitcoin has had big moves up, talking to the tune of 40K or plus. So that has happened or lined up. We just had a green MACD. Bitcoin is making new all-time highs now. Let's go over to the daily here. Bitcoin's making new all-time highs. It's above its former high. So a couple targets I have for you guys is this macro 1618. That's the high to low fib right there, from the high in 21 to the low in 22, and around 155K. If we take the macro high to low of the most recent target right here, that'll be at 130K for that move up. I'm just curious if we did a high to low here, would that line up? Kind of, not really. So yeah, I'm looking more for the uh, the very macro chart right here. 155K I've long talked about for Bitcoin being a target for a possible cycle top, and we cannot get alt season until we have that cycle top. So here's the log regression. We've hit those tops in the past in that log regression. Okay, so if we do that again, 155K, right in that area of what I'd be watching for Bitcoin. All right, let's get into our Mag 7 stocks, and we'll try to run through these. We're already 50 minutes into this. All right, great. So stock market, we can see NVIDIA from its micro high to low. It's getting some resistance there off the 786. Curious about the MACD. Let's put that on. So that's overall looking good. MACD turning green as well. Let's zoom in on the daily. Yeah, you can see the MACD on the daily running out a little bit of steam, but overall, weekly wise, looking a lot better. Now, countering resistance at the 786, you do want to be cautious about, the 618, 786 for me are kind of key targets or classic targets of lower highs, but we did get past this channel. We do have a green MACD, so what I might be expecting is NVIDIA to come back down to this golden pocket area, 123, 125, and then get a bounce from there. Nothing goes straight up. It's normal for assets to have a little bit of a bounce, whether off a moving average or a fib. So it has gotten detached from these moving averages. They are coming up, but that 125 area might be an area to watch for. Let's take a look at Microsoft. So Microsoft, it is above its macro 1618. Just got recently above its micro 888 fib. And yeah, Microsoft went way down here. And we were talking about on this channel that since the great financial crisis, okay, how rare is it for Microsoft to get down to the 200-week moving average? It's only happened twice in the last 15 years. So something to keep in mind with Microsoft, it is at that 888 number. If it gets past 468, if we get into bubble territory, then 560, 570 would be an area I'd be watching for a top. Let's get into Apple. Apple as well got down to its 200-week moving average, holding the 100-week moving average as support. Stuck under the 0.5. It is chopping up a little bit. Let's take a look at the daily. Yeah, the daily's showing some resistance as well on that 50-day moving average. So right now it is above its micro 382, which is good. So watch a 50-week moving average for bullishness. Watch a 382 fib, if something's flipping bearish to bullish as well. So we do have these higher lows getting through the 0.5 to the 618. Right in here, this 210 to 220 region would be big for Apple, and that's kind of next. You just have all that resistance there right in a row. Amazon looking better as all that resistance on the daily and the 0.5 sold off from its golden pocket, coming back down from there. On the weekly though, yeah, I mean, this thing has returned bullish, and it's above the 50-week moving average. Nice support there off the 0.5 micro fib. All right, we have Google is slowly getting above that 50-week moving average and that micro 382. That's a good thing for Google. Let's go over to the daily, and a little bit of resistance there around the 0.5 fib. So again, it's okay to expect a little bit of a pullback. So that happens. We had all this positive time. It's okay if this next week is a little bit red. That's fine. I'd be watching for buyers at around that 170, 166 region. Meta running into its golden pocket area against some resistance. Meta has looked like the strongest stock since the bottom of the 22. So it was only getting bounces off that 20-week moving average, and then finally it didn't even really test the 50. It went all the way down to the 100-week, but it is coming up. It is at the 618. So you do want to get not just a lower high, but if Meta starts getting above that 618, which it didn't really take too much. Let's see what happens. Probably come down to 610 and then hopefully get above there, and then I'd resume bullishness. Meta, I still have a macro target at around 860 for Meta at its next major fib. And lastly, let's talk about Palantir. Palantir had been one of the most risky tech assets in recent memory. And, this was one of those where I wasn't quite sure if, we were really going into a recession or if the bubble was popping, because Palantir was showing pretty good base, pretty good strength. And for something that's been so detached, whose PE ratio is off the charts, let's take a look at that again. We took a look at this last time. Its PE ratio, where was it? I I don't look at this. Yeah, here we go. 550. So I don't look at this section of TradingView too often. But again, remember what we were talking about with the Shiller PE ratio, with the averages? This is how detached Palantir is. So Palantir, it's really up there. And, next Fib target would be at around 146, 147. Then we have 170, and then 184, 185. Those are our next Fib targets. So again, Palantir, risky AI tech asset, has a $300 billion market cap. So, if you get excited, this is another thing, guys. You have to keep in mind market cap. Too many people don't respect market cap. If you're putting 10,000 into Palantir today and you want to double your money, then you're expecting it to go from 300 billion to 600 billion market cap. And to just put that in perspective, you're expecting Palantir to go to 250. Now, it's already had an insane move since the bottom of 22. Palantir has already gone up 2,000%. So it is not normal for it to go up to 4,000%. Just letting you know, it's not smart to buy stocks when they're at their all-time high after they've had that parabolic of a move. Not saying it can't go a little bit higher, but I would be waiting for some major discounts on this one. We're more in the sell territory than we are buy territory for something like Palantir. So that's how I look at stocks and altcoins to try to be smart about. Anyways, guys, let me know what you think in the comments below. Hope you enjoyed the video and that you have a wonderful rest of your Thursday. Take care. Thanks for watching.